So as you guys can see, we're ending the week off just shy of $500 gain. So overall, really good week. Once again, we're continuing on that consistent profit. We're already back to over 13,000. I think the high of the week was about 13,070. So we did end up a little bit lower than the high of the week, but nonetheless, still really good trades. And we're just gonna go ahead and get right into all the trades that I've taken this week. So the first trade I'll start off by explaining is Apple, and like I said, this has been in the past 2 videos, and it's a trade that has been continuing on for almost a month now. We've been able to profit close to, I want to say, like $300-400 within this past month just by selling covered calls. And once again this week, nothing new. We still have the average cost of 128.45. So on the average cost total, we are down about $380. However, like I said, we've been getting profit by just selling covered calls. And so this week in particular, we didn't get as much as last week, but we still got a pretty good amount. We got a $79 gain off the covered call. What we ended up doing was selling the $128 Apple strike, and it expired out of the money. As you guys can see, Apple is at 124.65, so you have to keep the 100 shares and keep the premium. So going into next week, nothing too complicated. We're going to be doing the same thing, hopefully getting somewhere in the range of $50 to $100 just by holding for the next week. And hopefully, like I said, we don't get the shares called away, because as long as we have the shares, we can continue to sell covered calls and make profit. But next week, because it is a holiday week, the premiums on the options are going to be a little bit less, because there's only going to be 4 trading days in the week. So I'm hoping for the best, but I'm sort of going into next week knowing that we might not be getting as good as premiums on the options, because they're going to expire a lot quicker. So the next trade we ended up taking was on Snapchat, and what we ended up doing on this, it was actually a day trade, and I actually ended up doing a call credit spread. So what that means is I ended up buying and selling 2 options at the same time to create the spread. We ended up selling a total of 20 contracts. So this was a decently big position. I think they're what was it, 100 wide? $100 wide, and we sold it for a total premium of 15 cents. So in all, the total value of all the contracts was valued roughly, or I should say the collateral that we needed to put up was somewhere in the $1,1700 range, and in return we got a premium of $300. However, I ended up closing the same day, because as you guys can see on the chart right here, Snapchat was sort of it spiked up a lot this past couple of weeks, but in particular this last week, I think it was up close to, I want to say, what was it, let me go check, 8%. And so that was a lot for Snapchat, in considering it just had its earnings like a few weeks ago. It was hovering right below or right above $50 range. It's been up quite a bit since that, so it's sort of a good sort of setup to sort of not necessarily say that it's going to go down, but sort of that the growth of it in the near-term future, like maybe in the next couple of days, is sort of going to halt, and it's not going to go much up higher. So that's exactly what I ended up doing. I ended up going with that in mind, and so what I ended up, or how I basically ended up setting up the trade, was that Snapchat wasn't going to go up above $63, because that's the call that we sold short. And so in return for that, we got a total premium of $300. But like I said, we ended up selling the same day, and we sold it, or we bought it back. I bought it back at $160. So overall, our profit on this was $140 in the matter of a few hours, because like I said, I ended up selling the same day. And I could have held on till expiration. As you guys can see, Snapchat did indeed end up below $63, but because Snapchat was sort of showing potential of gapping up even higher, I didn't want to hold the position and go into a loss and then sort of have to wait until the last day of expiration to hopefully have Snapchat end below $63. So because we were already up more than 50% on the position, I decided to just sell the same day, because it's not really worth the risk reward ratio holding on till expiration to get the last, what was it, $150. But in hindsight, we would have been able to keep the $300. But like I said, always better to secure profits than to hold on and turn those profits into losses. So the next few trades have been on Tesla, and the trades were all over the place. Some were calls, some were puts. So because Tesla has been sort of going, I guess I should say channeling through this range of about what was it, like 620 to like 580 range. It's been pretty easy to sort of gauge where it's going to be heading just using those supports and resistance levels. And so I've been able to day trade it these past couple of weeks, or more importantly, I should say this past week, I actually ended up taking 2 trades, and then the week before that, I ended up taking 1 trade. The gains overall, I guess, in the combination come up to $290 gain in the past 2 weeks. Overall, I think I could have held these positions a little bit longer, and some of them would have been able to print a bigger profit. For example, in particular, this last one that I took on May 26th, we ended up buying at I think the price, if I remember correctly, Tesla was right around 602, 603, and so I was hoping that it would maintain above that 600 support level, but it was really showing signs that it sort of wanted to dip below that 600 level, and I did not want to be holding the 610 calls if it was going to dip below the 600 level, because more than likely, if it dipped below the 600 support, it was going to drop a lot more, probably in the 580, 590 range. So those contracts would have gone down pretty fast, considerably, considering that they were weeklies. And so on the first big spike up, it moved up like $1 or $1.50. I ended up selling the calls for a quick $40 profit. I remember I was actually down around $210 or a little bit more on the trade. So, as soon as it turned green, I ended up selling. But as you guys can see, Tesla did indeed end up ending the week below, or I should say above 610. And I'm going as high as, what was it, like 630, 635, almost 640. So it would have been almost about $20 in the money had I held till expiration. So we would have been able to profit a lot. So we would have been able to make a lot bigger profit had we held till expiration. But there was no guarantee that it was going to go all the way up to 630 range. It could have just as easily dropped below that, like I said, 600 support range, and then it would have been able to gap down, to the 580, 590 range, and those options would have been worthless. So overall, I guess I could have held in hindsight, but I'm not complaining. A $40 gain in the matter of a couple minutes is still pretty good. And so the next trade I'm going to explain is on AMD, and for those of you who have seen the past couple videos, you're familiar with this trade, because this trade, like I said, similar to the Apple, has been going on for a while. Unfortunately, the shares that we had of AMD did in fact end up getting called away. That's not really a bad thing because we made profit, but the reason why I say unfortunately is because now we can't sell premium going into next week. And I would have liked to held on to the shares. We had a pretty good average price for the shares, but nonetheless, if AMD does end up dropping a little bit more, then I'm more than happy to get back into the position. But overall, going into this week, like I said, we sold the $79 call at $67. So we ended up getting a $67 premium up front just by doing that. And the shares did get called away, so we were able to get out at a break even for the shares, because I think my average for the shares was $79. But because we've been getting a whole lot of premium over these past couple of weeks, the actual profit on the overall trade, taking everything into account, was somewhere in the $400 to $500 range. I'll have to go back and look and add up all the premiums to give you an exact figure, but I'm not going to do that because I just don't feel like that's necessary, because I know that the trade was profitable. But nonetheless, that's pretty much it for that trade. Okay, and I actually had one more trade that I ended up taking this week, but I'm not going to include it in this video. I'm going to make it its own little separate video, just because it was a really, really good trade, and I ended up doing something that made the trade profitable. So to give you some context, the trade was on AMC. And for those of you who haven't been following AMC this past couple weeks, it spiked up, in particular a lot because of all the Reddit and the Wall Street Bets subreddits and stuff like that. That's a whole different topic for a different video. But nonetheless, the trade was a little bit complicated in the sense that what I ended up doing in order to make the trade profitable, because like I said, the trade was actually in the red at first, and so I ended up doing something a little bit special to sort of rearrange the trade in a way that was going to make it profitable, and that's why I sort of want to make it into its own separate video, because I just think it was a really good trade in my opinion, and you guys will see why. But to give you some context and not to make this video super long, the trade actually was a put trade, so I was hoping that AMC would go down, but as you guys can see, AMC did the complete opposite. You know, it went up. It's over 108% this past week. You know, and just looking at that, you might be able to say, how in the hell was I able to make a put trade profitable, considering that AMC went up 108% this past week? And I will show you guys in the next video. So if you guys are interested in how I ended up doing that, make sure you stick around for next video. I'm going to try to get it out by tomorrow, but I'm really sure that you guys are going to be very interested on that trade specifically. So that's pretty much it for this video. I will see you guys in the next one.